The three major U.S. stock indexes fell sharply on Tuesday after a worse than expected inflation report prompted new economic concerns.
And this comes just days after the S&P 500 hit a record high last week. And today, stocks have begun to bounce back from yesterday's losses. Some of them here to discuss is ABC's correspondent Elizabeth Schulze. So, okay, let's just kind of get right into this. It was a rough day for the stock market yesterday after the news of the higher than expected inflation report. What happened?
Right. So, Eva, look, this inflation report showed that prices are going up at a faster pace than expected. And that was not exactly what investors wanted to hear. The reason why is because that could mean the Federal Reserve could not cut interest rates as soon as Wall Street had hoped. But it is always important to put these market moves into context. When you look at this sell-off after yesterday, the S&P 500 still up about 4% so far this year. It has surged nearly 20% since November. So the bottom line, if you're looking at your 401k or an investment account, still looking at some pretty good news there, guys.
So what does the new report tell us about current prices and the impact on Americans' wallets?
Right. Okay. So big picture, the prices we pay are improving, but they are still going up. And you can really see this when you break down that inflation report into dollar terms. So look at what the typical American household is spending. Right now, it's about $200 more than you would have been spending a year ago every single month for the same goods and services. Compared to 2 years ago, that number is closer to $600. And 3 years ago, it's $1,000. So basically what this persistent inflation means is that every month you are paying more for the same stuff. But importantly, and this is a really important point, Americans' wages are also going up. So when you look at what the typical American household is making, the median income is about $1,000 more every month now than it would have been 3 years ago. So that helps up make up for some of those higher prices that you're paying, guys.
And we are feeling the higher prices. I think all of us are feeling the higher prices. So what is driving the higher than expected inflation?
Right. So every month we look at these inflation reports and we try to figure out what some of the big culprits are. And one area that it's not going to surprise people is rent. Rent prices in January did go up faster than expected. When you look at over the last year, rent prices are up about 6%. The other hotspot is grocery. I mean, this is what we see when you go to the grocery store. You see those prices are still high. And fruit and vegetables, especially in January, we saw those prices tick up. Going out to eat also still a lot more expensive now than it would have been a year ago. But we did also see some price declines, especially when you look at categories like clothes, gas, and used cars. Always trying to find the good news for you guys. And there is some areas where prices are actually going down now, too.
Well, the Fed was predicted to begin cutting interest rates next month. So what happens now?
Right. And this is really an important question for anyone who's trying to buy a new car or a new home or to pay off their credit card debt. You got to remember, the reason why the Fed aggressively raised those interest rates was to bring down prices. Basically, the way this works is the Fed made it more expensive for consumers to borrow money. That slows down how much they spend in the overall economy. And to be clear, this has worked. I mean, we've seen inflation come to this 3% rate now from 9% back in 2022. But the Fed has been really careful. It does not want to say that this inflation fight is over. So some investors had hoped the Fed would start cutting rates back in March. Now it's looking like that could happen, or they're hoping that could happen at least closer to June. What this means for the takeaway for you at home, if you're looking for a lower rate on your credit card or to get that new mortgage, you might have to wait a little bit longer for those rates to go down.
Hold off.
Yeah. Okay, so we also have to talk about the R word, recession. A lot of economists saying that a lot of the experts saying they think we've avoided one.
Yeah.
Looking at these new numbers, what's the thought now?
So, a lot of economists are still holding out hope that the U.S. is going to be able to avoid that dreaded recession. And here's the big reason why for that, guys. It's the strength in the jobs market. When you look at hiring right now, there are 1.5 available jobs for every one person who's looking for work. So companies are still hiring, and this is especially the case in services industries. So think of like healthcare or hospitality. Employers in those industries are still trying to entice workers with higher salaries and incentives. And those higher salaries, those higher wages have helped power people through as they're paying these high prices. And that helps explain why the economy, at least so far, and we're not out of the woods yet, but at this point so far, has been able to steer clear of that downturn, of that recession.
Let's keep those jobs coming. All right, ABC's Elizabeth Schulze. Good to see you, my friend, and thanks for being with us.
You too, guys.
Well, hey there, GMA fans. Robin Roberts here. Thanks for checking out our YouTube channel. Lots of great stuff here. So go on, click the subscribe button right over here to get more of awesome videos and content from GMA every day, anytime. We thank you for watching, and we'll see you in the morning on GMA.